Welcome to The Explainer. Today, we're looking at one of the absolute most fascinating corporate financial whiplashes in recent memory. We're talking about Oracle. Their recent sudden market movements present this massive mystery for us to solve today. It's a story of soaring technological ambitions crashing right into the gritty reality of massive fiscal strains. Okay, let's dive into this.
Chapter 1: The Sudden Market Reversal. So we really have to ask ourselves, what sparked Oracle's massive surge? How does a legacy tech giant suddenly find its wings when the broader narrative seemed so incredibly heavy just a few days prior? Keep this question in the back of your mind as we unravel the clues, because the answer is actually this really fascinating two-part puzzle. Think about this. Just a week ago, Oracle's stock was languishing near its 52-week low. It was trading right around $114. But fast forward to August 4th, and we're looking at a fundamentally different picture. Shares closed at nearly $142 on August 3rd. That is a sudden gain of over 9%. Now, what's really interesting about this contrast is the absolute starkness of the jump. You just don't see a massive, mature company pivot like that out of nowhere without a really, really good reason. So what actually changed? Chapter 2: Easing Macro Tensions. Well, let's look at how the events unfolded globally. Over a single tense weekend, we saw the threat of planned strikes against Iran transition into a de-escalation, specifically as President Trump called off those strikes and restarted negotiations. When Monday rolled around, the broader market responded with a massive relief rally. We saw lower oil prices and higher equities across the board. And for a major tech player like Oracle, this easing of global tensions provided a powerful macro tailwind, basically lifting the stock right along with the broader market tide. Chapter 3: The Google AI Catalyst. But here's the thing. That big surge wasn't just driven by global relief. It was largely driven by a major expansion of Oracle's partnership with Alphabet. They are directly integrating Google's super powerful Gemini AI models right into the Oracle ecosystem. This means these advanced AI tools are now deployed for wider, more direct customer access, right where those customers already work. This integration is a huge signal. It's Oracle placing an aggressive, highly visible bet that they can absolutely compete in the fierce world of AI enterprise software. And looking at that stock jump, we can see exactly why the market is rewarding them right now. Chapter 4: The Massive Bull Case. $638 billion. I want you to take a second and just let the sheer scale of that number sink in. So the crucial point is that this figure represents Oracle's remaining performance obligations, or RPO, if you like the financial jargon. In plain English, this is future revenue that is already locked in under contract. Despite any recent market volatility, this massive backlog is the ultimate proof of the incredible scale in demand for their underlying business. Breaking down exactly what that demand looks like, Oracle reported Q4 revenue of $19.2 billion. That represents a really solid 21% year-over-year growth. But to really ground these abstract billions, let's examine their recent government wins. They secured a massive $7 billion Pentagon contract. That breaks down to roughly $700 million annually over the next 10 years. That kind of locked-in, long-term government contract is the bedrock that gives investors immense confidence in Oracle's continued cash flow. Chapter 5: The Price of Growth. But, and this is a big but, despite the recent 9% surge we discussed earlier, Oracle's stock is still down over 58% off its all-time peak. Over half its value gone. That is a staggering drop for a company with a $638 billion backlog. Why? Because the market is fiercely calculating the jaw-dropping costs required to build out the physical infrastructure needed to support these AI dreams. The terrifying scale of the spending required just to stay in this AI race is absolutely astonishing. And this brilliantly illustrates the reality. Oracle spent $55.7 billion in capital expenditures in fiscal 2026 alone. That is just an astronomical amount of cash flying out the door to fund servers, data centers, and the raw computing power needed to make their Google AI partnership actually function at an enterprise scale. So how exactly does a company pay a $55 billion bill? Well, the consequences are harsh. To fund all this, Oracle plans to raise about $40 billion via debt and equity. The consequence of that is massive financial strain. Part of that plan includes a $20 billion share sale, which directly dilutes the value for current shareholders. And perhaps most alarmingly, this whole spending spree has caused S&P Global ratings to actually cut Oracle's credit rating to BBB-. To put that into perspective, that is just one single notch above junk status.
The financial strain here is an incredibly real concern that threatens to weigh down all of that bullish AI momentum we were just talking about.
Chapter 6. Opportunity versus risk. In short, Oracle is a story of massive opportunity, fiercely warring with massive risk. Let's move on and see how this builds into the ultimate dilemma. On one hand, the good, you have an unparalleled $638 billion backlog, you've got strong 20% plus revenue growth, and a critical strategic win in the AI race with their Google partnership. But on the other hand, you have the bad. This growth is being fueled by skyrocketing debt, brutal shareholder dilution, and a stock that, despite a recent rally, has been slashed by nearly 2/3 from its highs this year.
Which brings us to our final question. The market is clearly saying the upside is there, right? The demand is real and the technology is revolutionary. The upside is totally clear. But is the price to play the AI game higher than ever before? It's a high-stakes reality that every legacy tech company is facing right now in this boom, and Oracle is right at the epicenter of it all. Keep this delicate balance of risk and reward in mind as you continue to explore the rapidly evolving AI landscape. Thanks so much for joining me on this explainer, and I hope this helped clear up the mystery behind Oracle's wild ascent.